Chapter 9, Part 1. Financial Statements, Part B. Contents. A statement of financial positions, components of financial position, assets, tangible non-current assets, intangible non-current assets, current assets, components of financial position, liabilities, capital, non-current liabilities, current liabilities. A statement of financial position. A statement of financial position shows the assets of a business, what the business owns and what is owing to the business, and the liabilities of a business, what the business owes on a certain date. The assets show how the resources are being used, and the liabilities show where they come from. Statement of financial position. So this is the format of statement of financial position. Assets, first you have to mention non-current assets, then you have to mention current assets, that will give total assets. Capital and liabilities, capital, non-current liabilities, current liabilities, total capital and liabilities. Components of financial statement assets. Assets are divided into two types. They are non-current assets. These are two types of non-current assets: tangible non-current assets, intangible non-current assets. Tangible non-current assets. Tangible non-current assets are long-term assets which are obtained for use rather than for resale. They help the business earn revenue. Examples of tangible non-current assets include land and building, machinery, fixtures and motors. In a statement of financial position, it is usual for the non-current assets to be arranged in increasing order of liquidity. This means that the most permanent assets are shown first. A typical order for showing tangible non-current assets in a statement of financial position is as follows: land and building, machinery, fixtures and equipment, motor vehicle. Intangible non-current assets. Intangible non-current assets are long-term assets which do not have material substance. They cannot be seen or touched. However, they belong to the business and do have a value. Examples of intangible non-current assets include goodwill, brand names and trademarks. In a statement of financial position, the intangible non-current assets are shown before the tangible non-current assets. Current assets. Current assets are those assets, short-term assets. Because these arise from the normal trading activities of the business, their amounts are constantly changing. These are assets which are either in the form of cash or which can be turned into cash relatively easily. Examples of current assets include inventory, trade receivables, bank and cash. In a statement of financial position, it is usual for the business assets to be arranged in increasing order of liquidity. This means that the assets further away from cash are shown first. A typical order for showing current assets in a statement of financial position is inventory, trade receivables, bank, cash. Components of financial statement liabilities. Liabilities are divided into three types. These are capital, non-current liabilities, current liabilities. Capital. Capital represents the owner's investment in the business and is the amount owed by the business to the owner. Non-current liabilities. Non-current liabilities are amounts owed by the business which are not due for the repayment within next 12 months. Examples of non-current liabilities include long-term loan and mortgage. Current liabilities. Current liabilities are short-term liabilities. Since current liabilities, like current assets, arise from normal trading activities of the business, their amounts are constantly changing. They are amounts owed by the business which are due for repayment within the next 12 months. Examples of current liabilities include trade payables and bank